Is China facing a Japan-style deflation? Those betting on the theory that China faces a Japanification of its economy, they look set to enjoy a symbolic milestone in the bond market. Chinese bond markets are flashing Japanification warning. The yield on China's 30-year government bond is on track to fall below its Japanese equivalent for the first time in about 2 decades. Long-term rates in Japan have risen to their highest level in 13 years. This is driven by speculation that the world's fourth largest economy has finally overcome deflation. On the other hand, those in China have continued to fall to new lows due to pessimistic outlook for the world's second largest economy. China's economic struggles have fanned fears of a balance sheet recession like Japan experienced in the 1990s. Consumers and businesses opting to pay down debt following a real estate collapse were a hallmark of Japan's fall into decades of deflation. China is currently facing similar prospects: a property market recession, falling prices, and weak demand for credit. To address all these concerns, Beijing launched its most bold policy campaign in decades. The measures include rate cuts and a plan for a stock stabilizing fund. These efforts are to prevent a repeat of what happened to its regional neighbor. Meanwhile, Chinese President Xi Jinping and other senior officials, they pledged fiscal stimulus and a boost to the property sector. Duncan Wrigley, who is the chief China economist of Pathogen Macroeconomics, the yield convergence is a result of growing optimism that Japan will be able to escape its 3 decades plus of economic stagnation, combined with mounting pessimism over China's medium to long-term outlook. He further said, China shares some of the features of Japan when it entered stagnation, such as the property sector downturn, balance sheet adjustment issues, asset price corrections, and a demographic drag. A flurry of news on China's use of special sovereign debt to fund fresh stimulus highlights a growing risk to its record bond rally, a surge in new supply. The bond rally in China shuddered to a halt on the bill for stimulus efforts. Instead, the bond market has sold off after the announcement of the stimulus blitz, risking a Japanification of China's economy.